I'm still on Charlie 101, folks. One of the things Charlie talks about is what he calls the total financial portfolio, which is a way of looking at your total net worth, not just, what's my 60-40 stock bonds and my 401k. And Charlie, your point is that when you look at assets, total assets, things like Social Security, for example, Social Security should be considered a bond-like investment. Essentially, it's a inflation-protected annuity. And an average investor, your point has been, should be able to tolerate a higher level of stock ownership. Can you sort of explain that when we talk about total financial portfolio that includes everything like bonds, home equity, Social Security, other assets?
Yeah, I just think all of us make the mistake of looking at stocks and bonds and cash and saying that's my portfolio, and then what's the mix? And I think it would be really helpful if everybody would take a look at the present value of that wonderful stream of future incomes that are going to come from Social Security. For most people, that's a very substantial asset. We don't talk about it, we don't measure it, we don't quantify it, but it's a substantial asset. Now, be very surprised if you don't have something on the order of $250,000 to $350,000 coming your way through the Social Security program. And then if you look at the home, that each of us said, I'm not going to sell my home. I agree with you. But your children or grandchildren or great-grandchildren will decide they want to live in a different neighborhood, then they will sell the house. So it's got an economic value. Why not recognize it when you're thinking about what is it that you're dealing with? And if you blend those two, and if you want to add in collectibles, or if you happen to have art on the wall that's really terrific, yeah, or if you have wealthy parents that are going to give you an inheritance in the future, any of those things that you really know are valued, why not include them in your thinking so that you won't overweight yourself in fixed income? And the other side, if you don't mind my adding on, is almost anybody looking at the reason for holding bonds talks about the desire to reduce the fluctuations. Well, you can reduce the fluctuations another way around. The way in which major universities have all developed a spending rule that draws on their endowment a certain percentage every year, and they then average that over 10 years or 20 years, whatever length of time you want. I would personally go for 10 years as being plenty. What was the price on your birthday for 10 straight years? What was the price on your wedding anniversary for 10 straight years? What was the price 4th of July for 10 straight years? I don't care what date you choose, but really care about getting a spread over a decade and then use that as your base. You don't give a damn about the fact that the stock market goes up and down, because the flow going into your spending will be so much more reliable.
Right. So his point about Social Security makes a lot of sense to me. And people say I have too much risk. I can't have 60% of my 401k in stocks. And yet when you look at your total portfolio, as he is saying, and you consider Social Security as a bond-like investment, actually you could tolerate much more stocks.
Well, what we just did was make the case for financial advisors, to be honest, because a good financial advisor does exactly this. They sit down with a client and they say, okay, great, here's your portfolio. Let's talk about your house, your job, your career, your kids. All of those things have to fit in when you're deciding how much risk you're going to take with a given part of your wealth in the market. So whether you're doing that on your own, in which case you need Charlie's advice here to really go through and build your own household portfolio, your total net worth, or you work with a financial advisor who will help you figure that out.
Yeah, important thing here. Charlie, what about other assets out there? How about gold and Bitcoin? Are they parts of... You can see the Bitcoin industry trying to convince the average investor that cryptocurrency should be an asset class by itself. How do you look at something like that?
Bob, I've always thought it was a very good idea that Warren Buffett shared, which he didn't like to invest in anything he didn't think he understood. I don't think I understand Bitcoin. And so I've just accepted the fact that that's not me, and I don't know how to do that sort of thing, so I'm not going to.
Right. And gold? I mean, I've been covering gold for 25 years now. A lot of people argue it should be 3 to 5% of your portfolio. Gold was money. Gold does have, certainly make an argument gold's been around a lot longer. It does have some aspect as a store of value. It has been money in the past. Any thoughts on that?
Yeah, again, I don't think I understand gold and gold pricing, but the things that I have learned lead me to believe gold is not an investment because it doesn't produce increasing value. It's a speculation on what other people are going to decide they think gold is worth in the future.
Yeah.
And candidly, that's not the way I'd like to invest.
It's the same thing with my rock posters. I mean, Dave, you know, I
they're
collect old 60s rock posters. You know, Hendrix at the Fillmore. What do? They just sit on a wall. Look
they're
nice.
a hedge on the collapse of the dollar.
They do nothing. They don't throw off any money,
Right.
but they do look nice.
Yeah, exactly. And they go up when the dollar goes down.
Charlie, it's been wonderful seeing you again. And I don't know if you're going to produce more books. You've produced dozens of them. But it's a
Honest
pleasure.
goodness, I think Rethinking Investing says it all. And for me, that's probably the last book. But I've had such a nice time being with you. Thanks very, very much.
Well, it was a pleasure meeting you, Charlie. Thanks.
We really enjoyed it, Charlie. Thanks, and thanks for all the years of advice. You've been a big influence on all of us. That does it for this week's ETF Edge. You just saw one of the great investing legends. My thanks to Charlie and to Dave as well. Now, I've asked Dave to stick around and give us his perspective on broader ETF trends for the ETF Edge podcast. That's coming up. And remember, you can see all of our shows. They're all on our website, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.